Good afternoon, everybody. Nice to see so many high-level management people here. And a couple words about myself. I work in the insurance industry for more than 15 years. And with B&O Insurance, I work about 10 years. So when I started to work in Lithuania, at that time there were only, I think, 5 policies. Now we have, I think, around 1,000 companies insured on B&O Insurance. So I have quite a good experience, and I know the transit, how the people were thinking 10 years ago, 5 years ago, and how the management is thinking now. And this product is still developing because the world is changing. The IT world is changing dramatically quickly, and that's why directors and officers product needs to be changing as well. So I have touched around 50 claims in Baltic region, and I know practically how it works. So my aim today is to share my knowledge with you. We will have a case study at the end, and you will be able to ask any question about directors and officers insurance. So hope everyone will leave this room knowing much more about this line of business. So time is very limited. I have only 1 hour, so sorry, but I need to go quickly. So please keep your questions to the end, and hopefully we'll be able to answer it. Okay, so probably I will repeat some things which you already know, but this will lead us to better understanding. So manager, who is the manager? Manager is a special employee who is subject to high standards in performance and responsibility. So main duties of the manager is act solely in the interest of the company, to be loyal to the company, act carefully, honestly, and competently, and managers must do everything what is in his or her power that the company operates in accordance with laws and regulations. And that was a Supreme Court decision. Basically, these things are repeated in civil codes as well. And the main thing is here that the manager's liability is based on the civil code, not on the labor code. It means on the labor code, any other employee is responsible generally in 3 salaries, and managers are responsible for the full limit, in the assets. I have like Lithuania, Latvia, Estonia comparison. You can find more exact information in legal acts about manager's liability. One more important thing, when I'm talking direct or manager, I'm talking from insurance perspective. From insurance point, direct or manager, we call any employee who has management duties, so including management board, supervisory board, general director, finance director, and other lower managers. So just to tell you that it's a very wide definition from insurance perspective. So the main things that here are legal acts, and which describe manager's liability. And important thing is limitation period. So in Lithuania, it's 3 years. In Latvia, 5 years for non-competition obligation and 3 years for commercial acts. And in Estonia, 5 years. So it means that after you made some act, in this period, you can expect claims, yeah? There can be longer period if you did a crime and you alleged to do a crime. So this is legal environment. And usually these are the questions we ask directors, CEOs of the company. And I will not repeat everything, but you can read it. The main question, do you know that you can be liable just because you have the record? Maybe you didn't do anything wrong, but you are director and you can be liable. And from our experience, 70% of the claims to directors are not reasonable, but directors need to defend themselves, need to spend legal costs to convince that I didn't do anything wrong. So more than 70% are completely unreasonable claims, but this is the risk for the manager, and manager needs to prove that I didn't do anything wrong. So that's why the D&O basically insurance was created, because the manager is liable in full with his assets, with his money, and the property of manager is under risk only because he or she is a manager. So D&O insurance purpose is to save the property of the manager and give the defense cost. This is the main target of directors and officers insurance. Okay, I told you that director definition from insurance perspective is very wide, and here are details. So insured person means the director, any natural person who will be or has been a director of the company. So you see we're insuring former, current, and future directors, supervisory board, management board, and any other employee of the company who is acting in a management capacity. The history of this, it changed. So during the time. In the beginning, the D&O policies named particular persons, name and surname, who is insured. Then they moved to positions. We insure management board, we insure general director. Current directors and officers policies just are very wide. We insure all directors where current are and will be in the company. And I think this is important to all management.
I have a question. Where or what period of time is
From
Any.
perception. Yes.
2 years ago?
Yeah. Yeah, but you see limitation period, so.
What's the limitation, 5 years?
Yeah, for civil, but for crime it can be longer. Okay. So all directors are insured. So that's why when I will come forward. When director is leaving the company, there is a special extension in directors and officers liability that director has a 6 years policy valid for the acts which he committed during the policy period. Because director cannot control if the company will buy insurance next year. That's why many policies say that if you're leaving the company, you still are covered under this policy, or if the company buys a new policy, you're covered under a new policy. Okay, let's move forward. Wrongful act. Okay, I will draw something for you. There are 4 main things which are important to that directors and officers insurance could work. Yeah. So, for what period is made directors and officers insurance? What period you're buying usually insurance?
1 year.
1 year. Okay, so we have 12 months. And what is covered during these 12 months?
Event.
I mean, your acts done during this 12 months or something else?
Decisions.
That's correct answer. So I think 99% of D&O, current D&O policies covering claims coming into this period. It doesn't matter when the act was made. If director receives first time a claim during the policy period, insurance is working. So this is first requirement. Claim should be made during the policy period. The second requirement is the wrongful act of the director. The claim must say what director did wrongfully. So wrongful act must be named in the claim. Yeah, so the second point is wrongful act. And as I said, normally good insurance policies covering all retroactive acts. Act can be made here, act can be made here, and you just receive a claim saying that the director did the wrongful act. So what is the wrongful act? Any actual, alleged, or proposed. Every word is very important, because in some wordings, in some insurance policies, you will find that only actual and alleged. We will have a case study in that, so please remember that. So error, omission, misstatement, breach of duty, breach of trust, and employment-related claims as well, which can be committed or attempted by insured. And this is very wide. This is very wide, but manager's liability is very wide. You are responsible for all your employees. The mistake of your employee can come to the claim to the rate. And there are many, many examples. I remember one horrible example in Lithuania when one lady was robbed and it was locked in the car, and the car had a fire. And the lady had a phone, but she couldn't, she called, she said, I'm robbed. But phone operators couldn't set the position where she is. Yeah, even there was a requirement from regulator that this technical thing must be done, and this shows that the manager of mobile operator can be liable even for such loss, where his employees didn't fulfill the regulator's requirements. Yeah, so claim, wrongful act, what's next? What should be in the claim that directors and officers policy would work? There should be named director, yeah? So there should be director. On some cases, the D&O policy is working even the director is not named, and I will tell you in what cases. But usually the claim should state that this director did a wrongful act and the claim was received during the policy period. And there is a fourth important thing, which must satisfy insurance requirements. There is a loss. What loss is suffered? Yeah? So if I'm doing a claim to the director, I'm saying what he did wrong and what loss I suffered. So there is also loss definition in insurance policy. So basically these are four most important points which you must read buying insurance policy, reading the definitions. And if the claim satisfies all the requirements, insurance policy is valid. And what insurance policy does, what it gives to manager from the beginning, when you receive a claim is valid, what you receive from insurance policy. Lawyer? Yeah. You can book any lawyer you want and insurance can compensate. Usually the cost to buy a lawyer are the full limit cost. They are not limited. If you're buying 1 million, you have 1 million for lawyers. But you have to be sure that if the court decides you you did a wrongful act, so you need to compensate the loss. So it should be enough money to compensate the loss as well. But the first thing insurance policy does, you can buy any law you want. Usually we have a question, is there a limitation? Do we need to agree with insurance company, the lawyer? No, there is no limitation. Insurers simply say, please buy the best lawyers, because the best lawyers can stop you quickly from the future problems. Yeah? So basically, can you work with lawyers you know best and you are confident with? Yeah, so these are the 4 points. And so be careful with the policies which say that wrongful act must be done during the policy period. This is bad policy. So the main thing is claim received during the policy period.
So,
Yeah.
but if the director is not mentioned, so it's a lawsuit against company.
Yeah.
It's a different story.
Yeah, so if the company receives the claim, it's not a director claim, yeah? So the company afterwards can redirect the claim to director, then it becomes a director. Yeah? Okay? So let's move forward. Yeah, so in case of the wrongful act, I called it a claim, but basically it can be any written demand. It can be email, it can be fine, it can be lawsuit, and this is also important, but some policies are covering only court proceedings. When you receive a claim into court, only then the endo insurance is valid. So these are not good insurance policies. Good insurance policies, it can be any written demand. Yeah? And from where it can come? It can come from anybody. It can come from shareholders, employees, third parties, government institutions, competitors, clients, from anyone. And sometimes directors think that only shareholders can claim direct. No. From our practice, I think only 20% of the claims we regulate are claimed by shareholders. Government? Yes?
Out of your policies, what percentage end up in claims?
Good question. It depends on the sector. But for instance, Lithuanian state public companies, state government companies, has very bad results, and it has 50% frequency. Yeah, 50%. So every second has claim. Private sector is much lower. I think it's a few percent, 3%.
3%.
Yeah, 3-5%.
Per person or per company?
Per company. If we have a policy, we
Do you
Okay.
still insure state-owned companies?
yeah, we insure.
And we pay for this as taxpayers.
Should be maybe twice.
Yeah, let's move forward. What is the standard coverage, which usually is in the policy? I told you two main things: defense cost, and if the director is liable, if the court says you did a wrongful act, or you agreed before the court that yes, we are liable and there is no sense go to court, which we anyway lose, we need to compensate the loss. Yeah, so these are two main things, which is first and second. But you see, there are many other insurance extensions, which the endo insurance gives, and they are very important. So the third one, civil administrative fines and penalties. You know that in some cases, director receives a penalty, not a company. So the endo insurance is paying these penalties. Depending on the sector, but I know that in financial sector, these penalties can reach even 80,000 euros. But usually they are not too big, a few thousand, 10,000 euros. Then public relation costs, because we are covering reputation of the director. And if all the media says this director is bad, he did wrong this, he did wrong that, and this may lead to a claim, already has a claim, the director has the ability to bind the public relation costs, which usually are to the full limit, but sometimes they are limited to 10% of the limit. So have in mind that all public relation costs can be covered as well.
Public relations, but public relations regarding to the director?
Yeah, regarding director. This is, you need to prove to insurer that you are defending reputation of a director. But you know, director in the company is very great. The face of director, the director is the face of the company. So his reputation can touch the company reputation. So you need to basically to agree the cost and to agree the topics which you want to tell with insurer. Others I will go quickly. So spousal coverage. I mean, if director, for instance, is dead, his wife or husband can be liable for the loss. And I think we have very famous story in Lithuania with Mitnia, where the wife, after the director died, had a long course, and I think spent huge money for legal expenses to defend herself. So when you're insuring your liability, basically you're insuring your spouse as well. The same was here in the States. Outside directorship is, for instance, you're working in one company and you are sent to other company as a board member or as any director, so you're covered as well. Extradition procedures. What is important here from those extensions is subsidiary companies. So if the main company, other company buys insurance, all subsidiary companies are insured. I mean, directors of subsidiary companies are insured. Automatically, if it's good policy. Some policies say that yeah, but in most cases now they are covered. So, but you need to be sure, for instance, if you're having acquisition in the nearest future, some policies say that new acquisitions, new acquired companies are not covered. But good policies have even this put in the policy. If you are a subsidiary company, do you need to buy insurance? Depending who is your mother company, but sometimes we see the problem with big international companies where directors say, our company in Sweden has a big limit, big insurance, and we are covered. Yes, generally you're covered, but every insurance policy has it's called authorization clause. If there is a claim, the main insured, the main company, has a right to decide whether to give it to use to the subsidiary or not. So imagine you had some criminal case and your mother company can say, look, this is your problem, we will not give you the policy. We are not authorizing it. So that's why we are saying please buy a small limit, I don't know, 1 million limit as a subsidiary, and be sure that you have your separate policy. Loss mitigation cost, emergency defense cost is like normal, like a defense cost, but how to reduce the potential loss, it's about that. I talked already about retired directors coverage, so which is 6 years. Then we have securities claim. If there is a securities company which trades on the stock exchange, there is extension for that it is covered, the claims not to director but to the company. So this is probably the first extension from this list, which says that the endo insurance is not only about directors, it's about the company as well. Claims to the company are covered as well. Another example, employment practices liability. If there is, for instance, employment practices conflict with some of the employees and an employee claim the company, this can be covered under the director's insurance policy, but this extension should sound as employment practices liability for entities. And there is another extension which just says employment practices liability. So the difference is that if employee with whom company has conflict claims director, the extension of employment practices liability works. But in most cases, this employee claims the company. And this extension is not working. That's why you need an extension which is called entity employment practices liability. This is one word, but big difference. Another extension, which is very important for the company, not only to director, is preliminary investigation. So when some authority comes to the company, starts investigation, and if director is asked to give some answers, to provide some documentation, directors and officers insurers can work. There is no claim, there is no loss mentioned, there is no wrongful act mentioned, but if director is involved in the investigation, insurers treat it as a circumstance which can give rise to a claim in the future, and then directors and officers insurance can give you defense cost, legal cost, to talk to investigating authority. Definition of preliminary investigation differs from policy to policy, so it's important to read it. What is exactly covered and when? Because some policies say only when the director is brought officially, with some asking to participate in some authority physically. Some says that it's only needed to provide some information. So basically, if there is some investigation, always the director needs to provide information, because he's the top man and he needs to sign or he needs to agree every action. So this is also differs from policy to policy, but basically it's really important for company as well. So I'm saying that directors and officers insurance nowadays is much wider than just the defense cost of director and the loss payment for director. There are other things which are important for the company.
I have a question. You mentioned about this employment practices liability, but
Yeah.
now there are more and more contracts and there are authorization agreements or different kind of other agreements, not employment contracts. Whether this applies also to other types of agreements.
No, this is only with employment. Yeah, so if there is any other claim to the company which is related not to employment, whether it can be redirected to director, but then there is a conflict company director, which usually companies try and directors try to avoid. But if there is other than employment, it should not fall with this. Yes?
Could you in more detail explain retired director's coverage and extended reporting period? How this month works? What does it mean? What
Okay.
you can do during this period?
Okay, quickly, because we need to. So we have 12 months policy, and if I'm retiring from the company here, I have 72 months extended reporting period. Means that the claims which come during next 72 months because of my acts when I work for the company will be covered. Okay? So I left the company, but I still know that for 72 months, if I will receive a claim because of my work in that company, I will be covered. Extended reporting period, 12 months, is basically when you have 12 months policy, and for instance, company goes bad under bankrupt, and you cannot prolong, insurers do not agree to prolong insurance, you can buy under current terms policy to extend another 12 months. So you're in a bad position, but you can buy for 65% of the premium another 12 months. This is usual. Basically, I think I've used only once in my life this possibility to extend the policy. But this is for the company, good for the company, know that if I'm in a position that nobody will make a new policy, I can prolong the existing policy. Did I answer the question? Maybe let's keep questions to the end, okay? But I'm definitely answering. Crisis management expenses, basically, it's the crisis is when there is a death of director and the company needs to replace with a new director. So these expenses can be covered. I never had this claim. So these are standard coverages which should be based on most policies. What is considered a loss? So I put here what is not considered a loss. So criminal fines and penalties, and any attributable amounts to taxes and tax areas. So civil administrative fines are covered, criminal fines are not covered, and not paid taxes are not covered as well. So otherwise, nobody would pay taxes. But if you did not pay the tax, and then tax authority comes to you and they say, you need to pay the tax and another damage penalty and interest, I don't know. This part of interest can be covered as the end of loss. But the tax itself cannot be covered.
Even in the case of insolvency? If the tax is not paid due to the insolvency of the company, so there are no funds to pay the tax, what will happen in this case?
Yeah, so the endo insurance need to prove the wrongful act of director. Yeah?
Okay.
So the court can say that you probably had no possibility to pay. That's not the wrongful act of director. But the courts are very,
But non-possibility to pay is actually the consequence of some wrong activities in the past, yeah, so.
Might be.
Normally.
If the court says the director is liable for that wrongful act, insurance is gonna pay. I always tell the story about the courts, which we don't know what the decision can be. So before going to case study, I will tell, to exclusions, I will tell this funny story quickly. So two friends, the judge and advocate, walking on the street, and some guy, I don't know how it's in English, in Russia it's bomsh. Bomsh comes to them and says to advocate, please give me 20 euros because your dog just bit him. Advocate takes the wallet, gives 20 euros, goes away, and the judge asks him, why you gave him 20 euros? You don't have a dog even. And he answers to the judge, I gave 20 euros because I didn't know what the court will decide, whether I have a dog or not. So this is about the courts, yeah? And I need to speed up because I see the time is running and we have interesting case study. Usually there are 4 exclusions, prior and pending litigation. So basically what is already started, what you know, you cannot insure. You cannot insure burning house. Yeah? Fraudulent and criminal acts, exclusion is applied till the final judgment. It means if you receive a criminal act claim, you still can ask to pay for lawyers till the final court decides you did a criminal. Then insurers have the right to subrogate this, but from our practice, only 3% are subrogated. So basically, insurers do not subrogate. We had a case when the lady lost 3 courts and went to European court and won here. So this really allows to defend director assets and life. Also, I didn't mention one benefit of insurance policy, which is very important. People asking why I should buy a higher limit. Like, for instance, why 10 million instead of 5? So it depends how property we have. Usually when the claims comes to the court, I don't know how it's in English, but they arrest accounts. They arrest on property, yeah? So if it's a good advocate, it brings the policy to the court and says, look, we have 10 million limit with a high-level insurance company, and if I will be liable, this insurance company will pay for me. So please do not arrest my accounts or my property, that I could live normal life. So this is unseen benefit of the endo insurance and high limit. Okay, let's move forward. Bodily injury and property damage. Usually also defense costs are covered if the director is claimed for that, but usually this is general liability insurance. There's a separate line of business. Company should buy it. If you make a bodily injury or property damage to third party, or even to employee, there is employer's liability, there is a separate insurance which company needs to buy. This is not director's insurance. The same with pollution, which is also part of general liability insurance. So these are the main 4 points. Depending on the industry, there can be added other things, like if you like working as professional on some industry, like advocate or insurance brokers, so it will say professional liability is excluded because it must be bought by the other insurance line. Yeah, we have no time a lot. There are a few claims examples, so I will give you one of them, and then you will have to read others. Okay, CEO, the insured company, made an advance payment for 100% of purchase price with no additional security. Supplier went bankrupt, client didn't receive the purchase, and the loss was $1.8 million, and client went bankrupt as well. So the shareholder made a claim to the director. And yeah, this is our claim with touching. And there are many others. But we talk about some situations, and probably during the case study we will talk about other situations, about other claims. And what are the current challenges in nowadays life for D&O? So I put the 5 of them, but the main thing that there is a huge difference, and there are variety of D&O policies is big, and there is a huge difference in coverage. And it is really difficult to say this is bad or not. So that's why it's very important to have a good insurance specialist near you. Also, EU regulations. There are coming more and more EU regulations. Even big companies with big legal departments cannot sort all the things. So talking about smaller companies, the exposure comes on director, whether the company meets those regulatory requirements. So if the company does not meet, it can come back to director. The same is cyber and data security. You know that there exists cyber insurance, which is the most growing line of business in the world, but not in the Baltic countries. But this cyber policy needs to be somehow not merged, but adopted with the D&O insurance. There shouldn't be any gaps with the D&O insurance and the cyber insurance. So let's move to the case study. And the case study is very simple. We have 7 tables, yeah? We have 7 tables, so let's say we have 7 different boards, and each board needs to choose. You receive 2 D&O offers, and you need to choose the better one. We have 10 minutes, and I suggest that you split your responsibilities, because we don't have time. I suggest that one person is responsible for, because you see there are 3 pages. There are important definitions, so I suggest you make liable, one person is liable for one definition, another for another, and then at the end you make a solution. And then we'll ask one table to say what they chosen, and others can add their opinion, and then I will show you what I'm thinking about those proposals, okay? So I suggest you split your liability, because you should have an order. So let's start. Okay, time. That's it. Sorry, now you're the students. Let's finish. Because I need to collect the okay, so please, so you needed to choose A or B, yeah? Offer. So please raise the hands, the captains of the table, the director of the board, which shows them that the better offer is A. 1, 2, 3, 4. Oh, okay, all chosen A. Good. So now, which table wants to tell why you chose an A? Okay, this table. So we are listening to them and writing down the argumentation.
We are beginners, so we made some mistakes on analysis at the beginning. But we think so that despite that some coverage in numbers from insurer B gave bigger insurance limits.
Hello. Yeah, so despite that insurance policy from company B gives us let's say higher limits, but if we go to the details, we see that those numbers and special situations are described and are actually limited. And of course we have to look to the goal of the company to go for M&A in other markets in North America, for example, and other countries. We have to look to geography as well. So we think, for example, the pro for insurance policy A, its current and future subsidiaries, for example, are covered. And then, as I said, worldwide territory is covered for for this A. Yeah, and prosecution costs, full limit in insurance policy B 20% only. And of course, it's maybe difficult to compare. Maybe the legal have to have legal, say, education to have better understanding between all these claim, loss, direct or wrongful act descriptions. But we think that in many cases, by this policy, insurance policy A has more precise descriptions, and company and B is giving more broader and not so precise definition of several claims and situations.
So this all your, okay, thank you. Other tables to add?
Yes.
Okay, but quickly, because we have very limited time.
Two with specific issues. Riga Arbitration Court is mentioned, not Latvian court, and we know that Latvian court is not really moving very fast. That's the case. And second, we do see that advantage of insurer A is that notification of the claim should be submitted to broker, not to insurer, which can help us to prepare all the documents in a proper way.
Okay. Any other tables to add? Okay.
In the paragraph loss, we see that insurer B says that fines from taxes and other areas are not covered. So the definition of loss is much thinner than in the coverage or in the insurer A. And also definition of wrongful act in the insurer's policy B, it says actual or alleged act, and in the insurer A policy, actual, alleged, or proposed act. So it's also wider definition.
Okay. Any others?
Just to add about the security of insurer itself, it's rated by Standard & Poor's as A+. That might mean that they will not ask a lot of questions and just pay.
Okay, and B is what?
A minus.
So which is better?
A+, probably.
A minus is better.
Oh, sorry.
Okay, so thanks, really good points, and I have a few minutes to go through this, how I look at this as insurance professional. So first thing, I like the group read what is the company. I don't know the main points are bolded, but I don't. So it's North America, 350 employees. It means there can be claims from employees, many employees. Currently working acquisition of other companies. So I need to be sure that acquired company can be covered. And that's a Latvian company as well. So the first page is more or less everyone can compare. Limits are the same. Public relation costs, there's bigger limit. Fines, not a big difference, but we have 50,000 per one loss in total. Here is 25, so this even sounds better at the moment. Yeah, looks better. Then prosecution cost. This is very important. This is sublimit and this is full limit. So this is, I think, more important than those two limits. Current and future subsidiaries, only current subsidiaries. So new acquired company will not be covered, and I will need to buy a new D&O insurance policy. Go down. So we're finished. Yeah, then we see exclusions and yeah, no one mentioned entity employment practices. This is only employment practice claim, and this is entity employment. So this is very important. All claims to the company, not to the director, are covered under this policy, and this is not covered. By the way, these are real examples which were quoted for one company. This is not what I designed yet. So I don't know, maybe Baltic Institute of Corporate Governance saw that I made a mistake here. Sorry for that. Because you see in my version there is different. So this is not a mistake. Violation of law. There is exclusion, which is not here.
And question there. So what is then included in that policy if violation of law is excluded?
I mean, in all interpretations, that's why somebody else said that arbitration is very important. Yeah, if you will have a conflict with insurer, and they will say, you know, Latvian court, they say, I do not understand this definition. There is not in Latvian courts, because policies, even though usually it's in English language. That's why it's important to have arbitration, not the law, because the judge will not understand English definitions. Let's move forward. I have 2 minutes, basically 1 minute I have to finalize. But here is defense cost covered. Here is not. Built to wrong rights, that's it. And here you need until you prove the final judgment. Rating here is better. Premium is better. Here is excluded USA. And basically you touched all important things in definitions, but this one says any written demand depends, and you see that all definitions for this insurance is more structuralized and shorter. And it's more clear reading it than the other one. And this is what you need to make sure. And as I said, only one word can make a big difference. For instance, in this one, employee is covered, and this is employee is covered only when it does something. So it's much, much wider than this one. I see that I need to finalize. Yeah, I will send you this version with bolded things, then you could read second time, but I think you did a great job choosing the A, which is a bit expensive, but much, much wider. Yeah, the last questions.
In A, there's always a director, and B, always any director.
No difference, no difference. You should read definition of director, that's it. A question?
Yeah, a question about this retroactive period.
Yeah.
What is the best practice for retroactive period?
What's the best?
Retroactive period. What is the best practice for retroactive period?
Yeah, so it's full retroactive period.
A full without limitation?
Yeah.
No-
So
no
policies say that the claim received during the policy period doesn't matter when the act was made. So the good insurance policies have full retroactive.